Today, we're going to talk about our programs, which are similar, but for commercial properties. So, for commercial properties, DSCR is more of a traditional program for those. But Jose has some other examples that may use DSCR and may not use DSCR. So, once we get into the commercial world, we obviously can't quote that instantly. But Jose has some examples here where we can get into a commercial property. And obviously, we don't just have live instant rates, it's definitely a trickier situation there. But Jose, you got some good examples for us here today.
Yes, sir. I have a nice variety of examples here for us outside of the box options to give us some nice context to everything that's possible out there in the commercial world. Now, one thing to note about the commercial loans is that usually they're going to be non-recourse because they're going to be very large loans, obviously made to an entity. But in the commercial world, we have a myriad of different options that we can have depending on if you're an owner occupied property or if it's a pure investment type property, and also just depending on the type of property and on the type of business, because there's so many different types of options out there, whether it's restaurant or office building or whatever you may be doing. So I have a nice mix of purchase options here. So let me share the first one here with us. First one is a restaurant purchase. Now, we all know during the pandemic, this became very tricky. Restaurant options, you're really looking at either it's going to be a pure investment where you're not going to occupy it. I mean, it's not going to be your business, or it could be you're just buying the business just to have somebody else actually, buying the location to have somebody run it. In which case you wouldn't be an owner occupant. So the example I have here is for someone that is not doing an SBA purchase here, right? So you'd be looking at a rate. Now, mind you, also on the commercial world, it's really going to be so specific to the deal, right? They're going to weigh out the risk, location, borrower. I mean, they're going to vet everything. And then after they assess the risk, they're going to give you a rate. So the rate is not going to be set in stone, right? I mean, you would have to have the deal reviewed, and then they'll give you the exact rate. Usually, they're going to give you a range when they're talking to you without reviewing yet the docs. It could be anywhere from the low nines to the low 12s, right? So I basically put it somewhere in the middle here at 10.5%. Now, one thing also about the commercial deals is that the comp can either be all borrower paid, or you can have, in some cases, a combination of borrower and lender paid. The commercial world does allow that. So it really depends on which option that you're using. So here we're figuring 10.5% at 75% LTV for our restaurant purchase. So self storage facilities, which are very popular now. Now this is a full dock option, but they also offer a light dock option that does not use any tax returns. It's they're going to vet it on the bank statements of the borrower, and they do have a DSCR option as well, like Nick was mentioning. So again, in this case, we're looking at 75% LTV, rate 10.75%. Hotels are another category that we can assist you with. The hotels, motel, bed and breakfast also we can assist you with. They offer 30-year fully amortizing as well as 5 to 10-year terms with 25-year amortization as well. So something to note. And w- again, this is a scenario where they're going to vet the risk on the deal, right? They're going to look at the experience of the operator, and that's where they're going to see if they're going to give you the longer amortization or the shorter amortization, right? It's all about the risk about the property location. In the commercial world, they have, it's their prerogative to do whatever they want. Basically, if they don't like it for whatever reason, they can deny the deal. They don't like where the property's located or any of the factors like that. They can just not do the deal. So again, you're usually going to have some sort of a range up front, and then they'll give you your exact rate once they review everything. So here, this is for a 60 unit multifamily. We do have great options here at the mortgage calculator for your large multifamily loans. Now, this is usually going to be a 5 to a 10 or a 10-year term with a 25 or 30-year amortization, again, depending on the risk. But what you will see here is that the rate is very low. You're looking at somewhere around a 6% rate, right? So in this example here, and this is actually a quote, that we have
The
set.
points look a little scary, but that's a $5 million purchase. That's why.
Yeah, yeah, I was about to say, and this is an actual deal. I mean, an actual quote that we've sent out to borrowers for vendors that we have that offer, our conduits that we have for this product. So 6%, very good option there. So anyone looking for those large multifamilies, we are your source. So even though today's not an SBA show, I wanted to include SBA in commercial because if you're an owner occupant occupying at least 50.01% of the space, you are eligible for an SBA loan. I will note though, for an SBA loan, you have to be a U.S. citizen or a permanent resident. Non-permanent resident aliens are not applicable for SBA loans. So again, with the SBA, risk-based, property-based, so it is a little bit of a range here. So we're looking in this case, it could be anywhere from the high nines to the low 11s for the SBA. We're looking at 1% loan origination there, $1 million loan, $1 million purchase, 100% financing. Now, this is applicable when the borrower is an existing business uh, for at least 2 years and they are currently occupying a space for their business. Doesn't have to be the space that they're buying, but a lot of times that ends up being what it is. But they have been occupying a space renting for their business for at least 2 years, and they can provide that rental payment history and all the other business vetting for the last 2 years, and they would be able to finance 100% of the transaction. So that is a great option for business owners that want to transition their business from renting a space to owning a space. This happens a lot, for example, with warehouses, right? You have the business, you're renting a warehouse, business is going well. Now you want to buy your own warehouse, maybe a bigger one. So very good option there for 100% financing of an investment property. Now, this example, SBA, is for our more quote unquote traditional SBA option, which is up to a 90% loan to value. This would be for a brand new business, right? Or somebody that's not currently, for whatever reason, they have a business, but they're not paying rent. Well, then they wouldn't be able to qualify for the 100% financing because they wouldn't have the rental payment history to show. And obviously, if they're not in business for at least 2 years, also wouldn't be able to meet that category. So rates are going to be the same though. 10, in this case, I chose 10.75, and it's 1% loan origination. Now, this is one here really cool I wanted to throw out there. Right, this is really can show you how creative we can get with commercial loans. Now, this is a bridge loan, right? It's a commercial fixed flip, but this is a very interesting scenario. This is a 3 million. Okay, this property, and this is an actual quote that we sent to customer for a deal they're trying to put together. This is an old United Airlines office building, and the borrower is looking to convert the building into Class A professional offices, 40 unit Class A professional office building. So there's a $3 million rehab, and it's a $3 million purchase, and the ARV is $8 million. So in this example, we were able to get a $5,199,999. Why don't they just say 5.2 million, right? Loan. And let me show you the rate. So we're looking at 65% LTV to the ARV and 86.65% loan to cost, right? These are really good numbers. And you're looking at 10.99% rate. So purchase price 3 million, loan amount 5,199,999 is pretty good deal, considering customers going to have to come up with $800,000 plus their closing costs, but it's still a very good deal when you look at the overall structure. And then obviously this would get refinanced into the end loan, which was yesterday's event. The end loan, which would be something probably through the same outlet that we're using to quote that 60 unit building, probably somewhere around the low 6% range for this property. So very good commercial options out there outside the box situation, so that you are aware of all of the opportunities that you have here as an MLO, and that all the options that we have for our borrowers at the mortgage calculator.
All right, looks like we do have a couple of questions coming in here, so we can highlight those on the screen. Michael's asking, for the restaurant and self-storage purchases, do the investors prefer you to have experience with those property types? And then the second question is, do they adjust the LTV for inexperienced borrowers?
Oh yeah, I mean, absolutely. That's what I was mentioning, that they vet the risk, all the risk inherent to the deal, before they really give you the terms. So that's why in their rate sheets, if you want to call them that, they're always going to be vague about the LTVs. They'll tell up to this amount of LTV and ranges and rates starting at. But then after that, they're going to adjust for everything, and definitely experience level of the owner is going to be a big one. Now, I mean, it really depends on if you're talking about now owner operator, or like somebody that's occupying the space. Again, for SBA, that's a little different, because SBA is used to, if you're new coming in, and they're going to vet you that way. On the commercial side, the true commercial only, yeah, they're going to be a lot stricter regarding those matters.
All right, and there is another question here from Nicole asking what options are possible for foreign nationals, saying that she know you said SBA is a no-go, but on these other property and deal types, what options are available for foreign nationals?
That's going to be hit or miss. Not every commercial option is available for a foreign national borrower. The commercial conduits pretty much make up their own rules, right? So if they decide they want to lend to foreign nationals, they'll lend to foreign nationals. If they decide they don't want to. So again, it may be a scenario where they may not have it written in stone that they don't lend to foreign nationals, because if you have a foreign national with a lot of experience, then that's a whole different story, right? If they have a track record that you can provide, then you stand a lot better chance. But I will say that, yeah, it's not a guarantee that every option, every commercial option would be possible for a foreign national.
Remember, there's no lending laws or discrimination laws for commercial, right? SBA obviously can't discriminate you when you apply with them and comply with their programs, what Jose just presented, there's no, technically discrimination or lender laws or anything like that, right? So they can do it if they want to. They don't have to do it if they don't want to, right? Up to the day of funding, right? They don't like the way something looks or ends up, or something comes back that's weird. Remember, it's not like a traditional loan, so you got to be very careful there, especially with property type issues. Like environmental issues, right, Jose, are the things that come up that nobody can control really. And, unfortunately, there's no law that says they have to close if they found something that they don't like.
Yeah, with the SBA, it's a little bit different because that's a government-backed loan. So, and it is using taxpayer money. It's a subsidized program, basically. So they do reserve that for U.S. citizens and U.S. permanent residents.
All right. I don't see any other questions, so we can go ahead and wrap it up. If you want some more info here, visit us at themortgagecalculator.com. And we do this show every single weekday at 11 a.m. Eastern, where we go through the live rates and then do a deep dive into a different topic.